Good morning, everybody. Hey, welcome to Thursday, October 29th. A couple days away from the end of October. Yesterday, oh my goodness, yesterday was a bloodbath. Look here, right here. If you look right here, this part of the screen, the Dow down over almost 3.5%, S&P down a little over 3.5%, and the NASDAQ is 4%. Big down numbers yesterday. Can we bounce back? Have we reached the bottom? That's the question we'll talk about next.
5 Cutting Crew and Morning Dave here. We're at 8:41. It's 19 now before 9. Let's check in on the money, Mar, and see what's going on up in Wall Street. Yesterday was a decidedly crapola day. Start out by introducing our partner in crime for the day, Phillip Statler, down at Statler Financial Services in downtown Sebring. Are you there, Phillip?
I'm here, man. How are you doing today?
Not half bad. I'm surviving, but boy, the market got a bad case of the flu yesterday. Dow down 3.43%, down 943 points. NASDAQ down 426. That was the better part of 3.75%. And the S&P down 3.5% at 119 points down. Hey, wait a minute. Black Tuesday wasn't until today. You'd almost think yesterday was it, wouldn't you?
Well, you would have, but here's the deal. It's the worst day we've had since, I think, June. So
I think so.
It was definitely got people excited, heading down the wrong direction. I think that I was listening to an analyst this morning, and I can't remember what the number of traded shares were yesterday, but it was astronomically high.
And it has a tendency. Momentum tends to build on momentum. If the retail investors start watching the big guys selling, they start bailing, and then others start bailing, and it just became a rock rolling downhill yesterday, didn't it?
Well, yeah, it's all the computers kicking in, right? The numbers start ticking down, the computers kick in, and they take over the trading, and that's just not. That doesn't help anybody, honestly. So it just keeps that rock rolling, and it's almost like a snowball, right? It just keeps getting bigger and bigger and bigger towards the end of the close.
Yeah, it actually did, and it was one of those days in which, no, there wasn't any good news that was out there, but there wasn't anything new earth-shakingly bad either. I mean, we've got national cases of the COVID bug hitting new records. I looked at the map, and there is not one single state right now that's got a measurable decline week over week in terms of the number of cases that are popping up on the bug. That gets people nervous. But, one of the major pharmaceuticals, Moderna, put out a press release this morning, just a few minutes ago, as a matter of fact, saying they're just about ready to launch their vaccine. So the news even on the COVID front, while it's not good, isn't 100% bad either. It was just like you said, it was a rock rolling downhill, collected more junk as it went along because the computers kept finding other reasons to sell as another index hit another low, didn't it?
Exactly. And so, I think he said this morning that we didn't hit the very bottom number, but we hit the next to the bottom number yesterday in his technical analysis. So, hopefully we can bounce off of that. And since the numbers have come out, well, before you and I started talking, they were green. Now they're mixed again. So that little good news that we're going to talk about here in a minute has washed right through the system.
It sounds to me like we're in a foul humor up on Wall Street. Those numbers that you're referring to, first look at the third quarter gross domestic product. We expected a bounce back because we started reopening the economy a little bit, and that really tanking that we had in the second quarter should have come back a bit in the third quarter. They were expecting a 31% increase in the gross domestic product. We overachieved, made over 33% increase. So that was a pleasant surprise, albeit a small one, I assume.
It was a pleasant surprise. And when that number came out, as well as the jobs number, we saw the Dow specifically go from red to green, but unfortunately it's back to red now.
Geez, and even the jobs number wasn't enough to turn it around. We ended up with a slight better than expected first-time jobless claims. They expected, depending upon who you look at, 775 or 800,000 claims. only came in at 751,000 first-time jobless claims. Once again, not what you want to see, but still a lot better than they expected it to be.
It was, and then you look at continuous claims, continuing claims, and that was good. It dropped below 8,000 to 7.75 million. So we're seeing that number drop also. So between those two, you would have thought maybe, just maybe, that'd be enough good news to flip everything back around to green, but definitely doesn't seem to be the case yet.
I kind of wonder if the thing that's scaring the big money investors into keeping the indexes in red might have been the PCE inflation number. That's personal consumption expenditures. I didn't have an expectation on that, but we've always had this little thing sitting in the back of our mind. Inflation, with all the money we're pumping into the system, is going to eventually take off. We don't know how much and how fast, but the PCE price inflation index went up by 3.7% last month, and that's pretty doggone high. I'm wondering if that's making investors go askance.
Well, it could be. A couple other numbers that I saw, and I don't have any expectations out there, but personal spending was up 40%. And business investment was up 28%. I look at those numbers and I think, well, that sounds pretty good.
Should be.
Nobody tells us what they expected, but the inflation number may be a little high, but hey, it plays into what the Fed wants, right?
Yeah, and one month worth of data point. I mean, we're kind of all pretty well trained that you look at it, if it happens a couple of months in a row, okay, it's time to take notice. But by and large, even the PCE inflation, which is among the more volatile numbers out there, it's been hanging around the 2% or lower rate too. So 1 month, I'm not exactly ready to jump out of a window over that.
Exactly. Hey, can I share this headline with you? I just saw this. It just really jumped out at me, and it has nothing to do with finances, but it deals with over in Scotland. Mm-hmm. Scotland has proposed a bill, a hate crime bill that would criminalize offensive dinner table.
Better say that again. I lost you there for a second. Offensive what?
So, offensive dinner table, like you're having Thanksgiving dinner and you get in an argument with your cousin, it would outlaw those and make them a criminal offense.
I'm imagining Thanksgiving dinner in a lot of families turning into a SWAT team experience if that ever passed over here.
I mean, I'm thinking, okay, could that happen here? If it happened in Scotland, that would just be not a good thing. But I just that was a little humor for the day.
The other thing going through my mind is the Scots are so well known for being even-tempered. That's kind of interesting, isn't it?
It is, and obviously it's not a Scot. That's it's actually not a Scotsman that's in their congressional office, whatever it's called, that is proposing that legislation.
I would suspect not. Lighter side for the day. I enjoy that. No, be careful over your Thanksgiving dinner. The SWAT team could show up.
Yeah.
As we talk about things that are also on the lighter side, you got some lighter side news on the earnings reports too. We got some pretty good news out there, don't we?
We do. So let's kind of, I know time's probably going to be a little limited today, but let's look at some of the interesting ones that I think anyway. Retail, we had Tapestry, which is the parent of Coach and Kate Spade and some of those other high-end brands. They beat by more than double what was expected. Revenue top forecast. They've been able to lower their expenses and increase their digital footprint when it comes to sales. And they've been up right now.
I lost you for a second. I'm showing them 10.5% up right now on my big winner list.
They're actually up about 12% right now, Dave.
Wow.
Keep on climbing. And then the other one I have is Brands, which is the maker of Lee and Wrangler jeans. Mm-hmm. And they beat by almost 3 times what was expected for them. Revenue beat also. They reinstated their dividend, put it back in place, and so that's some good news there for them. They're trading up about 5.6% this morning, and this other one kind of threw me for a loop, Dave. Tempur Sealy, the mattress retailer, I guess people are sleeping more, or at least during COVID, they want a more comfortable bed because they're buying mattresses.
Uh-huh.
Um, they beat by about 75 cents a share. They're actually going to do a 4-for-1 stock split, and they boosted their repurchase um, of shares agreement, and so they're up 5.25% this morning.
Criminy, I guess lifestyle wise, given what we've been through health wise and all of the shutdowns and whatnot, that makes some logical sense. Uh,
It
I
does.
noticed I noticed Ford as we run short of time. I haven't seen them on a big winner list in a long time, but their report came out too.
They did. They came in. They tripled, more than tripled the expectations on their earnings per share at 65 cents. They're expected to come in at less than 20, and so better than expected revenue. They saw a huge increase in demand for their SUVs and their pickup trucks, which is good for them. They said it would report full year profits coming up soon. And so they were really trading up this morning. See if I can find here where they are. They're up 4.5% this morning.
Good heavens, you'd almost think we were going to town. When we get to today's action early on, it's not going to sound like it, though, on the indexes. One more that really excites you, and then we'll go to the summary.
Well, it's not really exciting, but Visa, because MasterCard reported yesterday. I think we should talk about Visa.
Mm-hmm.
They beat by 3 cents a share. Revenue beat Wall Street projections. Their profits are down about 29% from a year ago. Obviously fewer transactions, but they're kind of in line with MasterCard. I think they're actually a little bit better than MasterCard, but they're trading up this morning about 1/3%. But man, they got beat up yesterday. They were down almost 5% yesterday.
Oh, Lordy. I think everybody got beat up yesterday looking at the indexes. Like we said, down by over 3% on all three of the major indexes yesterday. 45 minutes before we open up, all kinds of good earnings news coming out, and I think I see a color change on my futures ticker. How are we doing 45 minutes early?
We have. You're absolutely right. We have seen a color change there. We've got the Dow up 0.1% now, which is green, which is good. We've got the S&P 500 up almost 1/3%, and we've got the Nasdaq up about 0.5%. The commodity side of the coin not doing quite as well today, Dave. We got silver down another 2.3%, gold down 0.75%. Crude oil, man, it is shedding through, man. It is down almost 5% this morning to $35.55 a barrel.
Which means energy independence is something we're going to have to get around that bend a little later on, because at $35 a barrel, we ain't pumping in this country, are we?
No, it's a tough sled.
Absolutely. Foreign markets pretty much are close to the zero mark this morning, given what happened to us. Asian markets were off, but by only about 1/3%. Europe is trading down just fractionally halfway through their day. Need to mention they're still shedding equities and going into safety. 30-year Treasury notes and the 10-year Treasury notes are both off by over a basis point this morning again, after really going down like rocks yesterday. Phillip, we're looking at volatility with a capital V at the moment, and that's got to scare anybody inside 5 years from retirement. How do I get a hold of you in order to put my mind at ease and save me on my Tums budget?
They can give us a call at 863-382-0037. They can also check us out on our website, statlerfinancial.com. I want to mention this because we are having a webinar that people can join on to. They can actually go to our website under events, and there they can register for our webinar. We're calling it Decision 2020. Are your finances ready? And we'll talk about some of what could happen with the election to their finances. So a good process to go through. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here again tomorrow morning on Light FM at the same time. Phillip, thank you so very much. I appreciate it. You have a good day, all right?
All right, man, you too.
And don't invite any Scots to your Thanksgiving dinner.
That might be in trouble.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. If you owe...
Hey, everybody, as we kind of close out the show today, I want to make sure that you remember we are having some webinars, and you can go to my website, statlerfinancial.com, right here under attend an event. And there you will see down here under upcoming events, we've got Decision 2020. All your finances ready. All you have to do is click the button and register. And we're looking forward to folks being on there talking about what the elections mean to our retirement and to our finances and those type of things. So, hey, I hope you'll stay tuned and register for that. Hey, I look forward to speaking to you again tomorrow. Have a great day.